Hello, this is Ahura. I will be with you with the global economic outlook in the week ahead, which is going to be the week 31st in 2025. As always, let's first check and see how review and what we had previous week, and then we can go forward and check the week ahead. Last week, it was somehow the interesting week because mostly not because of the economic data, mostly because of things that happen around the economy, especially with the earnings reports in one hand, and on the other hand, with the U.S. and China, U.S. and Japan agreements. We know that on the trade tensions, U.S. got some like mini agreement with Japan, and that helped the stock market generally, not just in the U.S. and Japan, overall in the globe, especially in Europe, also to increase because that supported the idea that maybe U.S. and Europe also can get some point before August 1st, which the tariff is supposed to start. But the negotiations between the US and China also is going on, and we know that there are very high risks that if they do not get to some agreements, I mean, they do not reach to some the points, maybe it can crush the stock markets at least for the short term. But generally, what we had the previous week, this agreement between this, the idea, that's at least the idea or the structure for the agreement, we can say, because it's not totally the agreement, it's like the structure for the agreement. This idea of the structure idea supported the stock markets and supported the global markets generally. In China, also, the data that we had, there were somehow the positive, they supported that we can get the 5% GDP expectations, the GDP growth expectations for 2025. In second quarter, we got the 5.2% based on the data that we had so far. In United States, with the great economic news that we had, generally, because when I say about the great economic news, not to say the great, because not they were actually somehow the great, because compared to the other economies, like compared to the Europe, compared to China and other economies, production data, service data, all they were better than the US rebels, especially compared to the Europeans. They had a very better economic data, which is supposed to support the overall idea of the economic is fine, and it's in a combination condition, and the central bank still can continue this current policies and the current rate. That's because the economic data support the idea of holding the current rates. We will see what's going to support. What we will talk about the central bank actually, because Fed we're going to have the meeting this week later. On the earnings front, on the earnings front, Google had a very good earnings supported to stock market, especially the 32% gain in the Google Cloud. That had a very good earnings report. But on the other hand, Tesla with 16% lose in the general sales lost the expectations and somehow disappointed its investors. Generally, the Tesla couldn't get the point that it wanted, mainly because maybe we can connect that to political activities of Mr. Musk, Elon Musk, that can somehow we can say somehow that it affected on his factory and economic activities. So, but generally, with the underlying data, if you look at the underlying data in the United States, still we should be somehow we should have some concerns about the economic growth as well. We shouldn't be that much positive generally. In Europe, the central bank hold the interest rate as it was expected, but generally the PMI numbers that we had, they showed that the European economy somehow is top among last 12 months, but still compared with the previous years, the European economic activities is still low, and we have to wait for more signs to say that the European economy is moving forward. That's why the central banks held the rates and wait for more reasons and more signs actually. In United Kingdom, PMI numbers showed that the service sector is getting slightly weaker. We know that the manufacturing sector also, they were not such, that's factors, manufacturing activities actually were not such so good and brilliant. That's why we should say that central bank in United Kingdom or Bank of England will cut the rates in its next meeting. In Asia, as mentioned, in China, with the 5.2% GDP growth printed in the second quarter, and with we know that the central bank mentioned, the officials actually mentioned that if US and China did not get the some agreement or not some structure, or they don't agree on the trade tariffs, they're gonna start, the central bank and the government in China, they're gonna have the more stimulus, which can somehow bring the idea that central bank in China, Chinese government trying to mention that, trying to emphasize that we're going to get this 5% GDP expectation that we're going to we planned at the beginning of the year. In Japan, we know that the economic data that we had, especially the inflation numbers, showed that the inflation is somehow getting slightly slower. Core inflation get to slower to 3.3%. Previously, it was 3.5, 3.6%, slightly slower. With these numbers, maybe the central bank's rate hike can get slightly later, but still it's not out of the picture. Still, we wait that central bank in Japan to hike their rates, but we're gonna see, this is what we expect to see, but not this that I mean this inflation data that we had. It means that it's going to be a little bit later. Not, I don't think that we're going to have the interest rates hike in the next meeting that we're going to have in this week. We will talk about the next week ahead. On the other economies around, among the emerging economies, especially in Turkey, while we were expecting 300 basis point rates cut from 46.50 to 43.50, they cut the rates by 350 basis point to 43%. Inflation is somehow as under control, around 35% annually. That's why the central bank, they cut the rates. But another, I mean, when I say under control, it's not, it doesn't mean that it's low. It means that it moves on the plan, in the plan of the central bank's plan. But we know that because of the political stuff, the central bank, they hiked their rates 2 months ago, and now they're getting back to the plans that they had before this geopolitical tensions. That was what happened previous week. But for the week ahead, as mentioned, the week ahead, it's going to be an amazing week. It's very busy and very big week with the central banks meeting, with the NFP numbers, with the geopolitical tensions. And while at the end of the week, on Friday, we're going to have the August 1st, where the trade tension is going to be at its top and highest the level of the tensions. And at the same time, we have very important earnings supposed to be published this week, including Microsoft, Meta Platforms, and others. On economic calendar, let's go one by one on the days. I will talk about the US at the very end. Before that, and the US and the central bank, I will talk about at the end. But before that, we're gonna review some other economic data. On Monday, we don't have too much important data to be watched. On Tuesday, we'll have the GDP numbers from some European countries, but what is expected to be get on the focus mostly, it's the GDP number from the GDP data from United Kingdom, where we expect to see the more sorry, not the GDP data, mortgage rate data from the United Kingdom. The mortgage rates and the number of the mortgage rate, we're gonna have the mortgage rates, we're gonna have the mortgage approvals. Since that the mortgage rate slightly increased previous month, that's why we expect to see we expect to see that the approvals of the request, actually the applies for the mortgage got a little bit lower in June. That means that the housing markets also should be slightly weaker. On Tuesday, we're gonna have the trade data from United States, but what's mostly will be watched is the retail sales numbers by Redwood, which we are expecting to see after 5.1% rate improve that we had in May. In June, probably we're gonna have slightly bigger data. Consumer confidence also slightly should be, I mean, it should be about 93, 94, not increasing, not falling around that number. But GLT is supposed to get slightly bigger, so lower, which means that from 7,770,000 GLTs or open jobs, we're going to have about around 7,250,000, which means that the labor market gets slightly cooler or weaker. On Wednesday, we're gonna have the consumer confidence. We're gonna have the consumer price index or CPI from Germany, where we expect to see the inflation is falling slightly lower, under 2%. We're gonna have the retail sales also in Germany. Also, the retail sales also after 1.6% fall in previous months, we supposed to slightly increase. The German on the German inflation supposed to be German inflation also we're gonna have this week, not maybe not on Wednesday. Yeah, but the German inflation supposed to be fell to 1.9%. On the GDP front, also German GDP supposed to increase by 0.1%. Actually, the market's expecting around 0.1% quarterly fall and 0.1% annual growth. But what I expect to see is around for the second quarter, I think the German GDP should be flat, same as the whole Eurozone GDP expectations. On the other countries, we're going to have the inflation numbers from other European countries, including the Spain, including the French as well. GDP for whole Eurozone supposed to publish also on Wednesday. Consumer confidence, no, the inflation, Eurozone inflation supposed to be published on Friday. On Wednesday, we're going to have the GDP numbers. We expect to see the 0% or the flat number for the second quarter. As for inflation, which is supposed to be out or published on Wednesday, Eurozone inflation is here. Eurozone inflation is expected to be around 2.3%. Not big difference. That's actually these numbers. They're going to be the flash numbers or the primer data. But generally, the inflation is supposed to say that inflation data is supposed to show that inflation is somehow under the control. The German inflation also, as mentioned above, it's going to be published on Wednesday. It's going to be published on Thursday, and we expect to see inflation is going to fall to 1.8% from previous 2%. Yeah, that's from out of the US. These are the most important data. And the PMI numbers, we're gonna have the PMI numbers also from most developing economies in the week ahead, but mostly they're gonna be the primary data, and not going to affect the market too much, because the data is going to show that that's like the first prediction for the July. So, but market gonna focus, as mentioned, on in United States. Let's first talk about the Japan and the Canada also, and then we're gonna go to the United States. On Wednesday, we're gonna have the central bank meeting in Canada, where we expect to see the interest rate to be held at 2.7%. That's you're gonna go here. BOC or Bank of Canada supposed to hold the rates at 2.7%. We know the inflation is somehow under control in Canada, and now it's time to see how the economy is going to react to these data. So that's why the inflation is that's why the central bank's probably gonna take the policy of the hold and wait policy. On next day, on Thursday, we're going to have the BOG meeting as well, in a central bank meeting in Japan, where we expect to see the interest rate to be held at 0.5%. But generally, based on the data that we had, inflation slightly decreased to 3.3% for the core inflation. This is while the economic activity also slightly slower. That's why the central bank may held, just like we are expecting anyway to interest rate hike for this year, but it's probably be supposed probably we're going to see that at the end of the year, not now, especially in this week. It's about the Japan and the Canada, but about the United States. United States, we're going to have the labor market data, core PC price index and PC price index, and NFP numbers. I will talk about the NFP and central bank meeting, because actually the event taught the NFP, which is supposed to be published on Wednesday. Market can somehow pay attention on that, but since that it's going to be like 2 days after the central bank meeting, cannot change the market, because the market is going to affect mostly to the central bank meeting and decisions, which is actually publicly now what's going to be the decision. But we're talking about that. But the labor market, we expect to see the unemployment rate to slightly increase to 4.2%, with around 100,000 newly created job, and average earnings also supposed to increase by 0.3% monthly, and around 3.9 9 or 4% annually. That's gonna be somehow the positive data for the labor market. That's gonna be written as somehow the positive data for the labor market. But the day before that, on Thursday, we're gonna have the PC price index, core PC price index. We expect to see that both PC price index and core PC price index, the personal inflation, to increase by 0.3%. To again showing that the inflation compared with the previous months is getting slightly steeper. They may support the US dollar index with this way, which is going to talk about that on the charts as well. But about the central bank meeting on Wednesday, as mentioned, we are not expecting to see any interest rate cuts or changes in the policies because as Federal Reserve officials in the previous weeks mentioned that for now, the policy, the economic condition is somehow resilient. US economy can afford this 4% inflation, 4.2%, 4.25%. The market's moving fine. The labor market's 4.1%, 4.2% unemployment rate is fine. Newly creating job is fine. We cannot say that they're not the concerns, but they're fine. Production's fine. Retail sales somehow fine. So all these data say that what we have right now is that this economy can handle this inflation and this interest rate, at least for now. That's why the central bank should not be in a hurry to cut the rates. So we are not expecting for any rate cuts. But what we're expecting to see, what market is looking at is this Mr. Powell's press conference right after the meeting. It's going to tell us what's going on in the market. If he taught anything or if he mentioned anything about the next rate cut, it's going to be in September or it's going to be later. All these data, what market can expect, what market can find or can take from Mr. Powell's or take from Mr. Powell's speech as his hawkish or dovish speech, that can affect the market. Otherwise, generally, we are not expecting to see very big effect on the market. Still, as mentioned, the thing is that this is a central bank meeting. It can affect the market, and we have to follow that very carefully. And let's go to the chart. Before moving forward to the chart, I have to mention once again that in the week ahead, the earnings reports will be at the center of stages, will be very important. And it is first, in Friday also, is the deadline or the last days when the interest rates, when the tariffs going to be started. If the countries they don't reach to any agreement or the framework or some points with the United States. So that's why it's going to be very important. If especially the China cannot reach any agreement, cannot reach to any structure or the point with the United States, it may crash the markets. But that's the high risk of the market in the week ahead. As for the US dollar index, the DXY technically find very nice support and very good support around 96. That's why after that we saw a little bit of the covering. Now around 97.48, we expect to see 96.30, 96.50, and 99, the area for the US dollar. But for the week ahead, 97.50, 98.50 will be the most expected dollar index. The area that we expect to see. Generally, we are positive about the US dollar, but not to see as a positive to see that that's going to be increased so much. But at least we can say that we wouldn't see much lower data. On the gold front, while the geopolitical tensions slightly, the market is actually, we can say, slightly decreased based on the trade agreements that we had and the positive expectations that we have for the week ahead, that somehow the stock market had a negative reaction. Gold market had a negative reaction to that, but against the stock market that they had very good reactions. So gold slightly decreased after reaching the 2 months high around about 3,400. But now we can say that in a correction, we are in a correction movement. Now we expect to see the prices around 3,300, 3,220, 30. But reaching a new high needs more volatile in the market. For now, we expect the market to be more stable around these area to find the 3,000, to make the 3,300 or around the 3,000. We had somehow same behavior in the market around $2,000. It moved around 2,000 higher, 2,003, and back to around 2,000, 2,100, 2,200, 2,000 around these movements, made this base very label and a very basic level for itself, and then started to increase later. That's what we can expect for the gold as well, for the gold price around 3,300 as well, 3,000 and 3,200 as well. So that's why for now 3,250, 3,250, 3,300, that these areas is in the mid side, in a midterm that we're expecting to see. That's why, so for now we say that somehow the correction around 3,300 what we're expecting. We're not too much positive about the gold, but in a bigger picture, still gold in a buy level, and any price fall around 3,000, we can call it as a buy signal. In the energy market, oil supposed to the oil, because of on Monday we'll have a OPEC Plus meeting. We know the production is increased. We know there's some good news about the production from Venezuela. We had some news about the Libya. Yeah, these data supported, and we had the news about the Russia also, about the more supply. These data generally bring the idea that the supply in the market is not an issue. So that's even taught the stock market. They increased very well, and they had a very good reactions in the previous weeks, and especially previous days. While the stock market, they were positive, gold couldn't, the oil couldn't move too much because of these news that we had. So in the week ahead also, we have to follow up the OPEC Monday meeting of the OPEC ministers, but at the same time, we have to check the stock markets as well. If the earnings reports are so positive, if the stock markets are good, that can support the oil market as well. Since on the other hand, we expect to see the US dollar to get slightly its lost power back, which can put in a little bit limited on the oil price as well. But generally, the oil still with the stock market, with this opposite ideas that we have in the market, we can say that the gold in this current levels can go further around 65, 70, 68, 64, around these levels. We are not too much positive or negative about the oil. Somehow the side movement around these levels still would be in the picture. And as for the stock market, for S&P 500, Dow Jones, and Nasdaq, all of them, they're still positive in a bigger picture, especially if you look at, for example, about the Dow Jones, around about 42,000 is still the positive. But any movement to be changed on the market, they have to fall back under 41,000, 50% of its Fibonacci from previous movements. But generally, what we can say in the market, still technically, fundamentally, we see some support in the markets, and now still for the next target, we can talk about a 46,000 if the price can hold itself above 42,000. As for the cryptocurrency market, after new high, take profits, taking the profits, especially, and the fear in the market somehow supported the fall. We know that the price, after reaching 120, about 123,000, fell to around 113,000. Slightly recovered around about 170, but generally now we are in a correction movement. But in a bigger picture, yeah, it's still positive. But now I think the correction towards is 114,700 is the 20-day moving average. Correction towards this side would be at the in picture. Falling under 20 daily moving average, under 114,700, can put the 109,000, these area in this good line. But generally, the bigger picture still, as long as it's trading above 100,000, it's still a positive right now. For now, maybe in the short term, we're gonna have some correction. This is what happened previous week and what we're expecting for the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.